The idea of losing your hard-earned cash on the stock market plays a major role in why a lot of people don't play the stock market at all. But today we're going to be talking about some ways to overcome that fear so you can get involved and start investing right now. How's it going, guys? Ryan here with another episode of my Stock Market Basics series, and today we're talking about how do you deal with losing money. This is such a big issue, and when I talk to people who don't invest and who don't trade and I ask them what's holding you back, one of the main things they say is they are scared of losing money. And today we're going to talk about that and some methods you can put in place in order to get over those fears. But as always, guys, before we get started, please remember to leave a like down below, leave any comments, questions or queries about the topic we're covering today, and of course subscribe for more content. And with that, guys, let's get straight into the video. So, as most of you probably already know, losing money on the stock market is basically inevitable for everyone who invests or trades. It's just the way it goes in this sort of area, and as a result, it's something you need to learn to adapt to, something you need to learn to get used to. If you're working a general 9 to 5 job, you effectively get paid for the amount of hours you work, for instance. You don't risk losing that money. Of course, you could obviously lose your job and as a result your source of income, but when you're investing or trading, you're putting the money you've already earned on the line, and as a result there is absolutely a risk of losing that money, and it doesn't really matter what you do, that money can be lost no matter the circumstances. So effectively what you've got to do is put some good strategies in place and put some good rules in place so that you get used to the idea of losing money but able to mitigate it at the exact same time. So if you're just starting out, the first thing I recommend you do is start out small. Don't put a lot of your capital into your trading account at first. Just put a small amount in. Probably less than $5,000 is likely an ideal amount. Effectively, what this will allow you to do then is start trading or investing, but at the same time, you're not risking an entire bank account worth of money, for instance. I know, yes, for a lot of people, $5,000 is unfortunately their savings, so put in less money when you're just getting started. But what you want to do is effectively minimize your risk when you're starting out, because this is the absolute biggest time you're at risk when you start initially trading or investing on the stock market. There's two key reasons you really want to do this. The first is, obviously, as I said before, you don't want to lose that money. But the second, and probably the more impactful reason, is you don't want to lose your confidence. A lot of people will start investing or start trading on the stock market. They'll lose some money, and often if they put a large amount of money in, that's a significant hit. And as a result, that just scares them away permanently because they've been burnt so bad. You don't want to end up in this sort of situation. So as a result, using a smaller amount of capital, especially when you're starting out, is a lot more safer and a lot more riskier, not only for your financial state, but also for your mental state when you're in this game. The second recommendation I have for you guys is to set a stop loss in place. Effectively, what you're doing here is minimizing the maximum amount of losses that you can take on a stock, no matter what you're trading or how much you're trading. Generally, you set a stop loss based on a point or a percentage basis. So a really good point to set a stop loss at is roughly 5 to 10%, because what that does is if you invested, for instance, $10,000, 5% of that is only $500, and you've still got $9,500 left to play with. If that stock that you were trading, or if that trade you were making, for instance, does not go the way you intended and it goes down in value, you still have a large amount of capital there to play with. The risk you do face though in still setting a stop loss is that if you hold a stock overnight, I myself do that for a lot of my stocks, you're at the risk of the stock, for whatever reason, maybe a poor announcement comes out, maybe the market goes into a bit of a downturn, it could jump past that stop loss and you'd potentially lose a bit more than your 5 to 10% that's in place. But As a general rule of thumb, having that 5 to 10% stop loss in place will assist you in not only getting used to losing money, not significant amounts though, but just losing money in general, and it will also protect your overall capital that you've put into that trade itself. And coming into my third and last recommendation, and this is the hardest one to implement, and it's effectively time and experience. That's what you've got to do to get used to losses, to make sure that you can mitigate them effectively, but also be able to deal with them when they do occur. The best thing you can do is effectively normalize losses on the stock market and become emotionally detached, and as a result, they won't have an impact on you. You also want to act in a way where effectively you're making trades or decisions that have absolutely no emotional attachment to them. So a perfect example is setting that 5 to 10% stop loss. What you're doing there is effectively saying no matter the circumstances, if the price drops 5%, I'm selling the stock. And you're basically protecting yourself. That 5% loss that you mitigated could have been potentially a 20, 30, 40, 50% loss had you held onto that stock. So effectively what you're doing is normalizing that situation. And the more you do this over time, the more experience you get in this side of things, the more effective it's going to be, not only from a trading perspective, but from an emotional perspective as well. And that wraps up today's video, guys. I hope you enjoyed it, and I hope you learned a lot about what you can do to put in place measures to make sure that not only you mitigate your losses, but also put in place measures that normalize them for you. It's a very normal thing to lose money on the stock market. You've just got to minimize those losses and make decisions which are detached of emotion so that they're calculated and strategic. And with that, guys, I hope you really enjoyed it. Please leave a like if you did. Leave any comments, questions, or queries down in the comments section below. And always subscribe for more content if you haven't already. With that, guys, hope you have an awesome day. See you next time.